go to 60. Damn, that's a huge drop. It's at 97 right now, right?
Yeah, 97 and some change, but it was just one of those arguments where I listened to it, I was like, I don't know. But then again, like she's pretty spot on when she does her analysis, especially in the macro side of things. So that's why I'm just like paying attention to her.
Why did she say 60 over everything?
I think she's just talking about, a reasonable drop on the dollar could be about a good, 25, 30%. And it would actually be very beneficial for the stock market as well as just trade outlook. So, I don't know why exactly 60, because I didn't really see like structural support um, or any reasoning for 60, but, I guess maybe it was just a number that she picked.
Yeah, I'm trying to wonder what would need to happen for the dollar to get to that point. Like you would have to have a rally in emerging markets and other markets to a point where they would just be getting out of US dollar and into those foreign assets to a point where it would just skyrocket, like the Chinese market would be up 100% or something like that. But then where does
Yeah,
that leave the US at that point?
yeah, I have no idea. I think that's the interesting part about all this is I
Yeah.
feel like we're also in such I don't know, different unexplored territory that I don't know how the next few years are going to go, but I do know that the Fed is probably going to do whatever it takes, in their power to reshape the market to keep the American economy going and possibly even keep um, our relations with other countries more so beneficial, that they want to invest in our markets and also hold on to U.S. Treasuries.
Yeah, no doubt. I totally agree.
Okay, so we are live.
Oh,
Um, yeah, but I just figured, we just enter in on a good conversation. All right.
okay, yeah, cool.
All right.
Hello,
I'm gonna do a
everyone.
quick. I'm gonna do a quick Bitcoin analysis, everyone. Um, I got Faisal here with me. We're gonna do a equities breakdown in a couple of minutes, but I just wanted to show y'all exactly what was on my mind in terms of crypto. Not a whole lot has transpired. I know everybody got a little excited once we started breaking through that 9192 level, but I really don't think that anything significant has happened in terms of key support and resistance levels being broken. However, there are still plays to be made. Okay, so if you're looking at Bitcoin right now, I've been talking about this 91.95 level since like last week. And I stated that as long as we stay under this level, all right, you can potentially, start aiming for more downside. But once you start breaking above 91.95, you've kind of made a structural change in the price action behavior in this, local last week and a half. And so now that we've broken above 91.95, I think the door kind of opens up towards 9,400 and maybe this range high around 9,500s. Okay. So in the advantage side, I took a scalp long along with my community. I let them know I'm taking a scalp long, but in large part, on my other account, I am still in my swing short. So that has largely been untouched. And I really don't think that I'm going to bother with closing it out or thinking about closing it out, because structurally we're still kind of putting in these lower highs. I think I showed you guys this before, which is, price is still traversing through this channel right here. I think we did break out a little bit, so I'm gonna have to rearrange my channel. But I think for the most part, we still have this high, lower high, this key low, lower low, another lower highs for this high right here, and this is another slight lower low. So until we kind of get this movement above one of these highs, I think we could still assume that price is still downtrending, at least in the last several weeks, or I guess basically till the beginning of June. And we also did have the monthly and quarterly close, right? So let's check those out. Okay, so I think the monthly was pretty much a doji. Let me see here. Got my pivots on, so let's turn on the pivots right there. So the monthly, I think, was pretty much a doji right there for June. And like I pointed out before, that when price was up here at the beginning of June, I told people to be careful because we've seen this kind of story before, where this happened right here in January and February, where this was the previous high. Price kind of, if you look right there, price broke up above that, looked like it was going higher right around February time. February closed lower, and then March obviously dumped significantly lower. And so the same thing kind of goes where this thing is now, where you can see, let's see here, let me actually draw this a little bit better. Okay, so the same thing goes right there where, the month of May right there is closed slightly above, but then June again closed below where these two candles opened and closed. And now we're seeing July potentially, just opening up. And we might pierce up above this area in July, but I would largely stay, we're at least in a pause mode because this is a doji, or potential reversal because I think on the way up, you could see volume kind of contracting as the candle spread has gone up. And so this is clearly an indication of buy side or demand exhaustion. And then you see this doji come up. If this doji especially had more volume right here, I would be even more concerned. But I think at the very least, this is a potential reversal. Okay. Oh yeah, quarterly. So let's check out the quarterly. So here's the 3-month candle. Okay, so let's get rid of this. So here's another thing, right? When it comes to the quarterly, get rid of this thing. I drew that way the heck back in 2018. But here's the thing about the quarterly, right? So everyone thinks that this is a bullish engulfing. You could count that if you just want to count the body of this previous candle being engulfed by this one. However, I would probably say that there's a significant amount of damage done due to this wick going way the heck down here. So if you're going to call this a bullish engulfing, I probably want to see lower wick on this as well. But I really don't think that this is a bullish engulfing, but let's just say it is. All right, so over here we had a big bullish candle way back here in the quarter of April 2019. And again, based on quarterly levels, you can see price actually wicked right into where these two quarterly candles opened and closed. And so the same thing is pretty much happening, right around that area, right, as you can see. And so next quarter will probably determine, if we're going to push up higher, we're going to start going down lower. But I think the one thing that's clear on a multi-month time frame or quarterly time frame is that we're still consolidating largely, but more so we put in a high and here's your lower high, right? Maybe this is your low and this is your higher low. So at best you could say this is consolidating, but you cannot definitively say that this is bullish. Like I said, it's at best it's consolidation. Okay. Let me see here. If there's anything going on. Yeah, here's something else that we could point out on the daily right here. Okay, so the daily time frame, you can see this was the previous floor for like a good 2 weeks. We broke below that floor. Now we're simply coming up to that floor and testing it as resistance. So this is, in my opinion, a pretty good short. Okay, again, I'm still short. I'm not going to tell you to short, but if you want to short, this is probably the best area to short. And same thing, the pivot, which is just a support and resistance level, is up here around 94.50 or so. That'll be another potential area that you may want to consider shorting. If we get above this area, then we can start talking about this R1 up here. That's around 10,075 or so. But until then, as long as you're under the pivot, which is pretty much under a strong resistance, more than likely, you can assume that, first of all, this is, a key downtrending structure and you're below key resistance level. So statistically, the odds are favorable that a short might work out better here. Let me see. What's going on, Deepak? Let me see who else we got in the chat real quick. Let's see here. Yeah, just hit the thumbs up, guys, if you do enjoy our content. If you are watching us for the first time, let us know where you found us. We also do have a 50% off in our Udemy course right now. This is our technical core fundamentals course. where you can learn technical analysis. And we have a 50% off on this deal as well. So it's only like $9.99. And the code is like Alpha Trades if you want to enter that in the coupon. Okay. It's also in the YouTube description below. So Alpha Trades will get you 50% off and get this course for $9.99 and give you 7 days in the Advantage community. And that's all the lock channels that you see right here. If you want to spend time learning about equities from Facile or FX or crypto from myself or trade options with myself and Facile, all that stuff is available in all these locked channels, which you can get 7 days free with the purchase of this course for 50% off. Okay. Let me see. Let me just make sure there's no questions regarding crypto, and then we can move on to the equity side. All right. Let's see. What is going to come tomorrow? NFP. Are we still going bearish on stocks? No. I mean, Deepak, on the Advantage side, we've actually been taking more long positions. I am long in Beyond Meat. I picked up some SPY option calls, and I'm also long on Uber. Basil has a couple of long positions. He'll discuss that. So no, we're not just aggressively bearish on shorts, but we are cautious. Okay. ADA BTC broke out. Yeah. So I actually put up an analysis for Cardano. I know they're what's it called? They're live. Is it LiveNet, Mainnet, or Shelly? Something is going live tomorrow in a couple of days. So I did hear a couple of members talking about that. So I am aware of that. And we've actually had the Cardano founder, Charles Hoskinson, on our channel for 2 interviews. So make sure you guys go check those out on our YouTube channel. Okay, I think that's pretty much it for the crypto side. We're going to talk about the stock market. So if there's no questions, I'm going to move on to equities. Okay. All right. Yep. No questions. All right. What's going on, Faisal?
What up, man? How you doing?
Doing great. It was a heck of a day in the markets, man. We were talking about the dollar earlier. We talked about the market kind of pushing up for the most of the day and then pushing down. I mean, what were your thoughts about the closing?
Yeah, no, the closing was a bit interesting. I did hear something earlier. For the record, we have not been bearish on stocks that much. Like we've been saying for the good majority of a month and a half, invest in tech, invest in healthcare, and those are just the sectors that did phenomenal today. And they've been doing great for the last month and a half, whatever it takes. I mean, you had software stocks like Okta up 9 points, Coop up 10. AYX is one that we haven't gotten into, but I've referenced it as a AI leader and data mining leader. That was up almost 8% today on a day when you have the Dow close in the negative. So there were a lot of Blackline closed up 6% today too. So there are just enormous amounts of opportunity, and I think we've done a really great job of highlighting the individual sectors that would benefit even during this kind of uncertain environment. So I just wanted to clear that up for everyone who's new. We are not bearish. We continuously think that there will always be opportunities, even in down cycles, and we do a great job, in my opinion, of figuring out where those opportunities are. So I just had to get that cleared up. But
yeah, no doubt. No,
yeah.
I think I'm glad you actually mentioned that, because I think one of the common misconceptions that people have is, they might see one of our videos talking about, potential like perils that we have in the stock market like a month ago. And over the span of a month, even during the span of a couple of days or a couple of weeks, the market itself is always breathing and evolving, and we have to adapt and evolve with it, right? And if you don't, you perish, right? You lose your money or you make wrong trade decisions. And so we've actually evolved with the market, and we've kind of just said that, all right, well, it looks like the market wants to keep going up, so we're gonna buy the good innovative companies that like Basil has been talking about, good growth, high growth companies. So we've actually been doing pretty well. We're not just aggressively bearish on the stock market. I also had to clear that up too.
Yeah, no, it's really been just a secular market, and that's probably how it's going to be for the remainder of the year. You're going to have stock groups like the bailout stocks, airlines, cruises, casinos. I don't think they're going to trade at the lows that they were at in mid-March, even though there's a lot of, if you read the news or whatever, there's headlines coming out that governments are starting to roll back their reopenings and stuff. And so naturally, people are thinking, okay, now's the time to get out of casinos or restaurants or whatever it was. When in reality, it was actually like a week, 2 weeks ago, because this was kind of expected. If like, and this is what the great thing about this, I think we've had a lot of success in timing these types of moves because we really try and realize that the market is always discounting. And it used to be that it kind of discounted a year, a month out, whatever. It seems like now, when you look at all the data, whether it's coming from the rising cases and all this stuff, the likelihood that we were going to have a second wave as a result of premature reopenings, this market was discounting effectively the airlines, the cruises, and the casinos. And so, we were short a couple of weeks ago, and we got out of them a week, and they've been doing fairly well, even as the reopenings are going back. I think, let me check real quick. I mean, Las Vegas Sands only closed down 1%. You had Penn stock, one of my favorite shorts. It was actually up 4.5%. So these companies are not going along with the trends. And I hope people who are shorting this market are not going by the day-to-day news or anything like that. Like, I don't want you to look at a headline on TV and be like, oh, that's the idea that I need to have. No, that like, there has to be some type of premature discounting in that type of news, because when reality sets in, or the reality of how the market digests things, is usually when you see the news, it's already too late. And so I just want to, put that message out there for anyone who's shorting. I've tried to short this market. For the most part, I've been pretty bad at it, honestly, only until like 2 weeks ago, a couple weeks ago, I got, fairly lucky with the casinos. But for the most part, if you're trying to short this market, it's really, really tough. But anyways, back to what happened today. It was once again a secular market. You had tech go up nicely, healthcare went up nicely. Utilities and REITs actually had a really surprising day. And I hope y'all took that trade that I recommended a couple days ago with CCI. That's been one of my favorite technology REITs, and it's gone up, I want to say, like 8 points in the past couple of days, and looks like it's got more upside to go. Probably a breakout coming soon. And so that was another surprising key that uh, usually you don't see sectors like that do well, considering they're more defensive based. And when they start to do well, that creates a defensive theme in the market. But to have them outperform with tech and healthcare, it just signifies just how mixed and choppy this market can be. Because if you're looking at traditional stuff, the themes that made sense a year ago or 2 years ago, you're going to get left behind. And so just always be adapting. I would say that at the close, the selling that we did see at the close was a little bit worrisome. Usually, I'm not one to get moved by the last couple minutes of rebalancing or whatever, but there were a couple key stocks in my watch list that ended up breaking below, especially in the energy sector. I think that'll be one especially to keep an eye on tomorrow. So Chevron, EOG, Valero, they better not make lower lows tomorrow, lower lows than they did today tomorrow. So that's one sector that I'm looking at. It's really important to see the participation in value sectors, because once we get that participation, that's when the market's going to explode. We saw that during a couple weeks in mid-April, I believe, when bank stocks ended up going up like 10, 15% in 2 weeks, same with energy and everything. And that just exploded the market to the upside in like 8% in 1 week. So I'm constantly looking for the value sector signals to give me the sign that they're ready to move up. But today was really, they were looking good up until then, but at the close, I'm still a little bit worried. I honestly wish I'd put on a hedge by the close, but I was too busy with watching all the movements. Totally forgot to do that. But if I see initial weakness tomorrow morning, you bet I'm probably going to end up shorting the small caps once again.
Yeah, lots to unpack there. One thing I do want to talk about is, you sort of being honest that shorting has not really worked in the market for you. And I think what I want to explain to our members is that there's going to be numerous times and occasions in your trading investment career that there is going to be some skills and some particular directional bias that you're good at versus, others that you're not. some sectors that you're hot in and some sectors that you're not. It's constantly an evolving and breathing game where you have to kind of adapt and evolve. In that, if you just keep thinking that, okay, well, I keep wanting to short and I will get this right at some point, yet you keep bleeding out capital, well, you're going to have to change up your game plan and rethink your strategy. Um, Kind of like Fassel on the long side of crypto, my long scalps have not been working so well. And people in the advantage community know that. I think the one thing that we do well in this community is we're pretty honest and transparent with exactly what we do. We talk about our losses, without any ego attached to it, because it's, again, part of the learning process, right? And so the one thing I've learned is that when in crypto, I've just been holding on to my swing short. And that's been working out really well for me because I've held on to it for over a month now. I've been getting paid in funding, and every time I take scalp longs, either my stops are too tight, I'm not getting a grasp on the market, but I keep getting stopped out and I keep losing money. Versus the short side, my funding has been paying. Um, I haven't really even like touched my short all that much, but it's been the best position that I've held for the last month and a half. And so the point is that don't be afraid to have a conversation with yourself and rethink your strategy about going into the market, whether it's crypto or the stock market or FX, because you might be doing something wrong that you don't want to admit, yet you keep bleeding out capital and you may not be able to succeed in other parts that you could be successful at. So that was just one point that I wanted to get across. Number two, Fausto's been talking about high growth and tech, healthcare, cloud and AI stocks, all in this equity side of the community. And he puts out these alerts and these fantastic, tidbit updates to the day. So if you guys are interested in things like that, I mean, just come join. Come see what kind of information Fausto puts out, because it is very useful in understanding from a day-to-day perspective of what he's seeing in the market, what positions he's taking, what he's trimming down on, what he's shorting, what he's longing. These are all things that he's pretty transparent about. The other thing that I want to unpack is, we have been talking about financials and energy as not being the two hottest sectors. Okay, we've been talking about them for a little while now. Even if you look at Chevron, it kind of looks like it's creating, a head and shoulders pattern right there, which is, an unconfirmed bearish pattern. Same thing with financials, right? If you look at XLF, JP Morgan Chase, they've kind of, for the most part, sector-wise, they haven't really performed well, or at least not as well as other sectors. Can you expand upon that, Faso? Like, we've spoken about this at great length, right? Why financials and energy are not doing so well. Can you recap on that for our new viewers?
Sure. Well, for the most part, I just want to clear everything up. I was really negative on energy when there was that whole storage crisis and no one knew what the hell was going on because there was seemingly no storage. And all of a sudden, no one's worried about storage anymore. So like that kind of went away out of nowhere. And when you start looking at these stocks when there is no storage problem, plus there are extended supply cuts, I actually get the feeling these stocks are undervalued. Now that doesn't mean that they're great long-term investments here, but I think they are great trading tools for the upside. I think you can be in these stocks for a week or a month and make some really good upside gains. So I'm short-term positive on the energy sector. Actually, I think they're a little bit undervalued, honestly. As long as we don't go into a complete lockdown state like they were pricing in mid-March. Like, remember, that was what was being priced in, was everything getting locked down and the world essentially shutting down. So these stocks have gone up a little bit, but I still have a feeling that they're undervalued and they could go up a little more. So there are external factors that are helping with that. Like I said, the supply cuts. But there are also the negatives, like obviously demand will probably not be as high as it was before. Actually, you know what? I'm going to say it's not going to be as high as it was before. So there is an equilibrium to that, but I think we are on the lower end and we need to come up some more. On the financial side, financials have been very tough because I know, some people in the finance industry and they usually give me a good read on how the banks are doing or whatever. And they've been pretty calm. Like they've been feeling pretty good, and a lot of the reports that I read is banks have cash on hand. They are able to take a lot of the stress that we're seeing in the economy right now. I mean, they survived the stress test for the most part, to fairly good lengths, to the point where most of the banks didn't even need to cut dividends. So I think there's a lot to be said about what's undervalued and what's not. And I think I like energy more than financials, but financials also seem a little bit undervalued. But I think there's too much uncertainty on the bankruptcy side, to the point where I don't even want to trade them. I'd actually want to short them on when they get to the top end of my range versus buy them when they get to the bottom end. But yeah, I think that's where I'm at right now, as far as the value sectors. I do think that if you're speaking on true value, if you are a value oriented investor, I still think you'll find great deals in the housing sector. And if you're good enough, if you're a good stock picker, you'll find great values in the industrial sector, because that just looks like where the job growth is going to be coming from over the next 1 to 2 years, as we recover from this retail massacre that's happening
Yeah,
right now.
I could definitely agree with that. I think the way the world seems to be pivoting towards we've spoken about how there might be a wave of nationalism coming, supply chains maybe being repatriated, possibly you know even more uh, reform in terms of rebuilding the infrastructure in America. All these things bode well for the industrial sector. Um, Now, do I think it's going to happen? Next week, next month? I don't really know. It seems like with this whole coronavirus thing, things have been so uncertain regarding any particular sector, but the most clear sectors that have been benefiting well are things in the cloud space, things in high growth and tech. And so for now, it's kind of like, if you're investing in these sectors and you're making money, well, why would you want to focus on industrials or financials um, or energy? Because the other sectors like healthcare are doing pretty well. The other sectors like tech are doing well. So focus on those until you actually see rotation or possible movement in these other sectors. So some of the questions that we had, regarding banking stocks. Well, I'm not really worried about banking stocks because they're not doing shit. You know, at least Wells Fargo, like that was a one stock that I really wanted to short to death because I really think that company is probably going to go bankrupt. But I'm not gonna. I'm not gonna touch it. I'm not gonna take the other side of the trade, nor am I gonna short it right now, because there's really no trade to be taken. So if you're looking at it from a trading perspective, right, there are so many other companies, and especially companies that Faisal mentions in the equity side right here, that are doing really well, that you don't really need to waste your time and energy on what's happening in financials and energy and industrials. Uh, so you'd have to do more homework on that. Just focus on the things that we provide in terms of our updates, and then start doing your own research and building your thesis for a trade off of that.
Yeah, I totally agree with that statement. I just would say, for the people that are concerned with, if you're a valuation person, you think tech valuations are extremely high, because when you look at a stock like Coupa, I think I checked it yesterday, it's like 450 PE. You tell someone to trade a stock like that 5 years ago, they'll think you're crazy. They'll think it's probably a junky company that's about to head its way to the downside. Look at this stock. Damn, this is a 450 PE stock for the people who love PE, and I've met so many of them. What do you got to say to this? Because it's been like, when it was at 180, it was actually at 150. Then it goes up to 200 or whatever. It just keeps expanding beyond people's normal ranges that they've been so used to for the past 5 to 10 years. And that's not only because investing in this market has become more so relative to what's working and what's not, but also the sentiment that people have, the appetite that investors have for future growth. It's just, they are so sure of the trends that are happening in this sector, specifically the software sector, whether it's the work from home relation or just the natural adoption of technology in the business world. Investors are so sure of that trend that they're willing to pay 400. I won't doubt they'll pay 500 PE for this stock. So keep that in mind. Like just because things are not cheap on what you used to value things on like PE doesn't mean they won't be cheap. I remember looking at Nvidia. I forgot what price it was, but it was a couple years ago. I think it was under $100. But it had a PE of 350. Okay, it was like a crazy PE. And you look at it today, the stock is at, what was it? What, 300 and something? What is the stock at?
Yeah, 381.
I think it got a PE of like 35 now. So you see things come into valuation like at an explosive rate, and that's what's being discounted. So for the people that always look at Warren Buffett, and I don't mean to like insult Warren Buffett or whatever, but he's someone that is from an older time that would never pay this type of premium for this stock, but he also doesn't understand just how explosive this growth can be on the tech side, and that's why he doesn't really have that many tech companies. I think all he has is Apple. But that's what's really changed, and that's a trend that I don't think people should continue to fight, because I see a lot of people, even some very smart investors like Stanley Druckenmiller, say these stocks are at such extreme premiums, there's no way I could touch them. The risk reward is just too terrible. And, I just got to disagree with that. You have to take what the market's giving you. I will say, though, if you're someone who is still worried about valuations, because look, I don't want to say valuations don't matter, because then that's just dumb. At some point, they will matter. Um, I I would say stick to the healthcare sector. I've looked over the numbers again. That's still the sector that has the most amount of value and growth. And I think if you're betting on the next 5 to 10 years, that's the sector you want to be in. Not only because there's a lot of innovation coming out of there, but because the stocks themselves are are growing extremely fast, but the prices are not matching the growth that you're seeing in some of these sectors, or in some of these industries like the software industry or the cybersecurity industry. But the innovation growth could still be just as big, and it may not be as complicated when all these companies are projecting 20% growth, and then they intersect in each other's addressable market, and then it's like you have winner over winner over winner, and then it becomes a battle of who's the last one standing. Healthcare innovation is more unique and more individual per se. So their growth can be longer, in my opinion. It can run for much more time than the software sector, that seems to have kind of similar products, but they have different pricing models or whatever the case may be. At some point, I think, in the software sector, in the cloud sector, Microsoft will end up becoming a king with like ServiceNow and two other companies. And we have like 80 companies right now. But that's just my or that's just my expectation for that sector. But healthcare is definitely my medium to long-term play. I love healthcare, whether it's medical devices like Edwards Life Sciences or Abbott, or even the healthcare providers. UNH is,
United.
yeah, United Healthcare is awesome. But there's a little bit of uncertainty as far as the political ramifications relating to that industry and the pharmaceutical sector. But I still think bet on healthcare, bet on medical device companies. In my opinion, that's just the best industry in the healthcare sector, because it has innovation. They've lagged as far as price performance relative to their innovative peers in the software sector. So yeah, I would definitely do some homework on that industry.
Yeah. One of the things that we often talk about is the PE ratio, and how, at least for right now, it's very hard to classify companies under their respective PE ratios, because you don't really quite have proper earnings or guidance until 2021, 2022. So you don't really know exactly the kind of growth or potential these companies are going to see over the next few years. And for those who are watching right now, I mean, companies are always going to reach for higher valuations or prices well before they actually start performing in terms of um, bringing in revenue, bringing in profit. So the price itself for the stock is going to outpace what they're actually doing on the ground. That's for sure. But what you need to be careful about, in my opinion, is that yes, PE does matter, but right now you know, you can't really say at face value that, well, this is 200x or 300x PE. Like, for example, Shopify today, hit that $1,000 mark. And I was just looking at the Shopify PE right now. And it's, what is it? I think it's trading at, what is it, 1066x for the PE ratio for the daily, right? Which is, I mean, insane, And I don't really know even how they got that, but because I actually like Shopify as a company, but still, right? Like that is an insane valuation for a PE ratio. But for someone who's actually within the industry of how online marketing works, how you see more of the world heading towards the online space, to me, Shopify is like a no-brainer that it should be successful. Now, my question to Faisal is, are you ever concerned about the oversaturation of some of these companies in the same segment? For example, if we're looking at cloud or software or semis, how much market share is there, and how can all these companies be doing, explosively well? How do you take into account something like that?
Yeah, that's exactly what I'm saying. At some point, they're all projecting 20% growth for the next 5 years. Well, if they're all growing exponentially, they're going to run into each other at some point. And then I think you're going to see a massive consolidation in the industry. You're going to have companies go by the wayside because they just cannot compete, or it's going to get ugly. And these PE ratios that are trading now, like Coupa at some point will come down to a 35 PE, whether or not it actually matures into that valuation or it just sells off to that valuation. That remains to be seen. But I totally agree with that. There is one thing that I personally like to think whenever I buy a stock. This is a very key question that I ask myself. What exactly am I paying for? And I think that's where the valuation comes in. When you buy Shopify at 1,000 PE, what exactly am I paying for? Am I paying for exponential growth over 2 years, 3 years, 4 years? And if so, you kind of have to do the modeling yourself as far as where they've grown in the past and what they need to do in order to meet that expectation to let's just say round out to what's a normal PE ratio for a mature company? Like I want to say it used to be 18 to 20, I guess, if you
I
grew.
mean, I think Apple is trading currently around like 12 or 15, I think.
No, Apple got a little bit more expensive with this run. I
Did it?
remember Apple did used to trade at, they used to call Apple the value stock, like the best value stock of the market. And it was when it was at, I believe it was like $90 or so. It was trading at a 17 PE, but they
Oh,
were
it's
growing.
28 right now. Sorry.
Yeah, it's 28. And so, I thought it was in the 30s. So I think it was trading around 15, 16 PE, and that company wasn't even fully matured. They still had a lot of growth coming out in other segments. It's just the market at that time wasn't valuing, didn't have an appetite for 5 year growth or whatever they have an appetite for today. Even I'm sure of what they're buying for today. But that's the one thing why even when I've taken these software plays, I've been a little bit weary to hold on because what am I paying for when I'm buying something that's a 500 PE? Like I get the growth rate is awesome. The exponential uh, growth as far as how many more businesses, like for the software sector, how many more businesses actually need this software integration. Those numbers look awesome. But am I pricing like when I buy Blackline at like $90, does that mean I expect it to be like a market leader in 5 years? Or is it just going to be another of those players that may or may not get eaten up by another company? And I think right now, a lot of these companies, when you buy them, it's pricing in that they're each one of them, if they're trading at these extremely high normal valuations, each one of them is pricing in a complete, not a complete dominance, but a pretty good range of dominance in their respective industry. And like Amo was saying before, at some point they're going to kind of intersect. And I just that's what I have trouble for. If you're buying these software stocks right now for the next 3 to 4 years, I think that's a mistake. I think you can buy these stocks for, uh, you know, 3 months, 6 months, whatever the case may be. But like I said, at some point, valuations do matter, and I think when the real life factors come into play and things start to get more clear about how much growth, like how clear the growth is, because right now people are just buying growth because there's so many other things in other industries that are just not growing at all. And so they're willing to pay up a huge premiums for something growing 50% revenue at this point. But like I said, when like I wouldn't be a long-term buyer of Shopify. And
Yeah.
I like Shopify as a company, and I think they have their place in this market. But I think when you're buying it at $1,000, you're essentially saying it's going to be the only dominant player for the next 5 years. And maybe they could be, but I just want everyone to keep that in mind. When you buy something, what exactly are you paying up for?
Yeah, fair point. Um, the title of today's video is "The Fed Has Your Back. Do we just full bull mode this?" And the reason I put up that title is because, based on the conversation that we had Sunday with Austin, I was telling you all about, the POMO, the permanent open market operations that were coming up, which are $80 billion, of Fed going out into the market and actually, either picking up bonds or individual corporate bonds, any other operations that they had on their agenda, they're going to conduct this particular week. So the only thing I kind of paid attention to last week, the reason why I started picking up my S&P 500 calls, the reason why I picked up Beyond, the reason why I picked up Uber this week, is simply based on a couple of factors. Number one, I saw the market come down to some key support levels, which is right around the 3,000 psychological level. I think 2965 is my support level. I don't know if you have that as your support level, Faisal. Um,
I gotta take a look. Yeah, sorry about
okay,
that. I definitely gotta
okay,
take a look after.
no problem. Yeah, so mine was somewhere around like 2950, 3000, and so both of those, pretty much held. And I saw, Beyond Meat also coming down. I was like, okay, well, I like Beyond Meat as a company. It's coming back into its breakout phase. So I said, you know what, I'll take a punt on this. I like Beyond as a company. I like what's happening in the Fed side. The S&P 500 is coming near support, and so my trades the last couple of weeks, well, at least the last week, week and a half, have largely been Fed focused and also just watching the basic technical levels. Because the one thing I've kind of understood is it really seems like no matter what happens, the Fed is coming in on any random day, whether it's Jay Powell talking about, we have unlimited ammo, or there's some, news about vaccines going off. This is something that happened all through April and May. So I kind of took this calculated bet, like, okay, well, let's just see what happens. If I pick up these positions, they're all near key support. I don't care about the PE. I don't care about the stock price itself being overvalued, undervalued. I'm going to buy them solely on the fact that I'm watching the Fed do what they do, and the fact that the technicals are supporting my bias. And so far, it's kind of worked out because the market has kind of inched up. I think I saw Zero Hedge and other financial blogs I listened to start talking about how the POMO is actually impacting the stock market. What is your thoughts on that strategy, Faisal? Because I really want to hear, because you are a very fundamental driven person. I wonder what you have to say about that.
Yeah, that the liquidity that the Fed provided is nothing that anyone can fight. It's nothing that you should fight. Um, to me, that just means I'm going to continue just trying to find the best long opportunities that I can and not worry about the noise. The Fed will always have your back, even during really bad times at this moment, and so it's just clear to not fight that. That is the most powerful force in the entire market, and there's not really much more to say to that. Do not fight the Fed. That they control the entire system at this point, because I think it really helps that every other country is kind of doing similarly what we're doing. And you know, everyone's debt runs on the dollar. As long as we control this period of time right now, this critical moment, I think it's just no one can fight the Fed. But ultimately, I don't think the Fed's going to be enough to push this market to an all-time high like people think. I think if the Fed does see the market trade near all-time highs, there's a chance that they may even scale back a little bit as far as how much they buy, or how much they put into the market. How much have they put in, actually? I read something that
Uh,
they have still a ton left to go from their initial statement. Like they've only
well, Well, I was going to say this week was actually one of the highest, POMO operations till date. And then I think in next week or 2 weeks from now is going to be even higher, which is I think $112 billion, permanent open market operation. So it doesn't seem like they're slowing down. It seems like they're kind of pedal to the metal kind of thing.
Mhm.
I guess obviously maybe come into July, maybe late August, they might slow that down depending on what they see the impact of that on the market. Because I think the one thing that Jay Powell has made clear is they'll do whatever it takes to kind of you know uh, allow the Fed's power to push up the market, push up the economy. And largely, when asked about the question of do you think that we're creating an asset bubble, he's pretty much said that, well, even if we are, like, this is not really the time that I want to worry about it, or this is not the time for us to fix that kind of issue. Those are his actual words.
Yeah.
So I think for now, kind of like you said, it's like when the music is on, you gotta dance. When the Fed is buying, yo ass got a lawn. you know
Yeah. No, I totally agree. Just, I, this market works in such mysterious ways. It's very secular, as we've been saying. It goes in and out, and sometimes just understanding the basic that the Fed has your back, it just I feel like at the beginning in March and April, we were all trying to look for shorts. We were all figuring out what to short, what not to short. And I think I can't remember. I think it was on that 60 Minutes interview where the Fed literally said we have unlimited ammo, or Jay Powell said that. He came on 60 Minutes, and he just talked about how we will do whatever it takes to save everything. And um, that should put your mind at ease. Like, as long as they continue to do that, keep interest rates low as well. Big corporations, especially the ones that are not suffering from this COVID stuff, is those are the companies that'll benefit the most, and definitely will set themselves up for even more growth over the next 3 to 4 years. So really don't fight them, but also understand that they are keeping rates low. So that is very critical to a lot of these big corporations who are not really suffering as a result of why the Fed is keeping the rates as low as they are.
Yeah, yeah, fair point. Um, I think on that note, I think we'll start wrapping up. There's just one question about gold. I've covered gold in my Sunday video as well. I actually had a gold long. What was it, last Thursday or Friday? And I think it got stopped out literally by like $1. But for the most part, I had an extended target of about 1,800, and I think we just fell shy $11 of that. I still do think that gold is probably going to push up higher. I have a silver position, GLD small position. Both are doing pretty well. Gold has actually broken above its key resistance level. So as long as it stays above this 1747 marker, I'm still technically expecting at least a 1850 or 1900 target. And I think that's more than possible. You could also look at this as a massive um, cup that's developing, and maybe we might have a handle, like you could call, well, I guess you can't really call it a handle just yet, but you might see, a handle developing, like, let's just say something like this. If you're talking about this being the cup, and maybe once price gets towards like this 1800 target, you might see something like that developing, and you could possibly, buy into this area and then, wait for the breakout. So a couple different ways you could look at gold, but for now, I'm definitely bullish on gold. I'm definitely bullish on metals. I think going into the summer and by the end of this year, cyclically, I did read that metals do tend to do better in Q3 and Q4. This is again by Lynn Alden Research. This is just something that someone I've been listening to a lot on things that I'm not aware of, but things that you may want to consider if you are investing into metals. Let me see. Bullish on home builders and new construction. Yeah, we spoke about real estate and REITs a little bit earlier, so make sure you go check that out. I don't think there's any other questions, so I think we're going to wrap it up here. Again, guys, we do have that 50% off on our trading course right here. You just have to type in the code alpha trades like this, like that, as you can see, and you will get 50% off. So this course is going to be $9.99, and then you can get access for 7 days in our community for free, with the purchase of this course. And you can check out all the awesome things that Basil talks about in the equity side if you are interested in that. Okay.
Yeah, I just wanted to say I do have two stocks I want everyone here to take a look at soon. These are two stocks that I am currently looking to get in probably within a day, maybe tomorrow or early next week if the market holds up. Just based on what I saw today, Home Depot looks like it's setting up very nicely. HD.
Oh,
Yeah, Home Depot or Lowe's, whichever one you like. I like Home Depot better. The Fed was even buying their bonds as well in that whole scenario. So that's something that's very interesting. Home Depot has a nice technical setup, and today it just gave me alert. So keep an eye out on that one. And then AMAT. I've been talking about this company a lot. They are a semi equipment company, and today semis got a little bit rocked because of some news that came out as far as the FCC chairman uh, recommending to not work with Huawei or ZTE, and I think that rocked the semi space a little bit today. But for the most part, these types of opportunity or these types of news cycles that regard the U.S. and China tensions, they end up always affecting these semi stocks, and it always ends up becoming a great buying opportunity. So AMAT is one that I'm looking at. It still is very fundamentally undervalued, in my opinion, and I think based on what Micron said about the overall demand of the semi cycle yesterday, whether it was from data centers or all the growth innovations that are coming out, the semi industry looks good. And I think that is really good for these semi equipment makers. So there was no negative commentary on inventory. I think that was the biggest thing. If you are someone who's going to invest in semi equipment, a big thing to pay attention to, and you can read Micron's report too, is take a look at whether or not the inventories are piling up, because usually when semi chip inventories are piling up, then people don't need to order as much equipment. They're just, it's going to be a little bit slower of a season. But no, for the most part, inventories were fine, and that's really well for AMAT. And I'm very surprised that it's still trading this low, based on all the color that we've gotten for the semi industry. So keep an eye out on those two tomorrow and probably next week.
all right. Fair point. Awesome, Faisal. Well, it's always great having you. Um, Till then, we'll catch up Friday for another post-market analysis.
Yeah, man, sounds good.
All right. All right, everyone. Thank you for joining. Hit the thumbs up, and I'll catch up with you all soon. Cheers.
Peace.